Welcome to the Let's Talk Property with MFS podcast. MFS are a bridging loan and buy-to-let mortgage provider and not a financial advisors. The opinions expressed in this episode are personal to the host and guest and may not reflect the views of MFS. Hello and welcome to another episode of Let's Talk Property with MFS. This is the podcast where we're going to cover all things property. And today I'm very fortunate enough to have Mike Cook from MFS, who is our head of mortgages. So hi Mike.
Well, hello.
How are we today?
Oh, very good. Thank you for having me.
Good. Yes, thanks for coming. First of all, I'd like to just start giving us a little bit about what it is you actually do at MFS. I know you're responsible for a lot of things within the company. So yeah, a little bit about how you got to where you are now and what you're currently doing with MFS.
Yeah, sure. So I've been in specialist mortgages and mainstream mortgages for many years, so probably over 20 years. Come through from very specialist pre sort of 2008 through to mainstream and getting larger lenders into intermediary mortgages, and also started in my previous role Vida Home Loans for sort of 5 years, and then an opportunity came to join MFS to start a very established bridging lender to start a buy-to-let arm, which we've done, and we launched just over a year ago, and it's gone from strength to strength. I would say we're in the complex specialist space. So you've got your high street, you've got your specialists that are often owned by banks or they're subsidiaries of banks, through to what I would say are our complex specialists, which is we will focus on, foreign nationals, very complex property types and so forth. So for me, we've recruited a team, we're up and running, we're bringing systems in because we want to be, a considerable player in that space. So for me, it's making sure everything's from front to back. Yeah,
well, like you said, the buy-to-let property proposition that you structured and helped create has been very popular amongst our brokers and sort of the foreign national clients. And sort of today, I just wanted to touch on the sort of brief history on buy-to-let and what you've seen through the years and the differences you've seen, because obviously you've been within the industry for some time now, so you would have seen.
I'm old. That's what you're trying to say, yeah.
You said it, not me. But
yes, sir.
but yeah, so you've seen a lot of changes within the buy-to-let market. So what sort of stuff have you seen compared from 10 years ago to what you're seeing now, maybe?
Yeah, sure. So, I mean, buy-to-let really sort of started opening up in 1988 when the AST, the Housing Act, brought in a sort of fixed-term tenancy, because before that, landlords were just those wealthy old men that literally bought properties for cash and let them out. Conditions weren't particularly brilliant, but it was a smaller market. And then the first real buy-to-let product, if you like, came out in '96. Working with the letting agents, where there was, they could see the demand for letting properties, but they needed more landlords and more stock. So actually the first buy-to-let sort of products came out around 96, 97. And then sort of from 2000 to 2007, obviously what happened in 2008, was an interesting time for every. Well, absolutely, and I was well and truly working in specialist buy-to-let then as well. It grew from sort of 4 or 5 million a year in 2000 through to sort of 45 billion, 46 billion by the end of 2007. So you could see that phenomenal growth in buy-to-let. And if you think about it, there was the start of the I suppose you call them the dinner party landlord, ma and pa, got a couple of kids. Oh, have you got a buy-to-let property? Oh, yes, I have. And it was all very nicely served. And, your pro landlord started to then evolve because they could finance. They didn't have to get commercial loans from banks or private banks. They could finance their property. They could refinance their property. Property was growing really quickly. And all of a sudden, the pro landlord was born as well. It had portfolios. And so I think, as the noughties came on, people started to get affordability issues. Generation rent was born, where you couldn't afford the deposit anymore, and that just kept getting further away. So there's just more and more demand for property. So buy-to-let lenders and financing became cheaper. It became a lot more mainstream.
More accessible to people than it ever had been.
Well, exactly. Whereas before you had to have, almost like an up and running business, and it was, you were almost frisked to get a mortgage. So it's now much easier, and it became easier and easier through the sort of, I guess, 2010 onwards, once the market had sort of recalled and recovered. But I think it's evolved, and I think what's happened is the deposits got smaller as well. I think my first buy-to-let property was with a company called GMAT. It's no longer with us. It was an 89% LTV, which you won't be able to get now, but it allowed you to get on the ladder with a smaller deposit. And so that evolved, but I think it got so popular that the government kind of had to act. And so I think they sort of started to take away some of the tax benefits. They sort of added stamp duty tax, and with most governments, they tend to play to the audience. They play to we're stamping down on these people that are entrepreneurs and taking the stock off people. No, they weren't. The government wasn't building the stock that was needed. So it needed some control, but I think they went too far.
And I think the government does have a habit of doing that from time to time, don't they? They see, we're hearing a lot of that, especially from landlords and people like that constantly think they're being unfairly treated at the moment, with a lot of different rules and regulations coming out and various other bits and pieces.
Well, a great example was they felt that letting agents were charging too many fees to people when they were starting a tenancy to do credit searches and reference checks and all those sort of things, and kept charging them to do the tenancy. So the government banned them. So what do the landlords do? Well, they get charged and they put it on the rent. So they get taxed more, they put it on the rent. Yeah. So one way it's a good message, but the downside is that people end up paying more anyway.
The customer always ends up suffering the cost of anything. If same as with the banks and anything, when it comes to passing on costs, it's always the customer that ends up.
That's exactly it. So rents don't get any more competitive by doing this. They actually go higher and keep going higher. So they brought in lots of regulation, and actually that changed, and there was rules from the Bank of England on how banks must underwrite. So it started to then fork in the road a little bit. There were some specialist lenders that specialise in the self-employed and the slightly quirkier properties.
Many companies.
Yeah, and we'll start to talk on those today about HMOs, or houses of multiple occupation, where more than one family or unrelated people live together, and it started to split. And what you had is, and today the high street still take most buy-to-let. Yeah. However, the specialist sector has grown and grown and grown to be multi-billions. Of the sort of last year was about 55 billion of buy-to-let, but that was a slower year the year before, so it accelerated. And so what actually tends to happen is the markets evolve, and people then tend to want to get more yield out of their investment. Yeah. So then they start to get a little bit more adventurous, and more lenders come in, more competition, and then the criteria becomes a little bit more competitive as well. And then, of course, branched in, something you're very familiar of, you're related to a lot of property developers, a lot of property development, people that wanted to buy a place to do up. And then, of course, the first-time buyers also wanted those as well. So that creates competition. But they're very, very active markets, and then people get into the likes of, well, if I get a bridging loan to buy something,
maybe below market value, or something where you've got to extend a lease on it, where you can, use your bridging first, do what you need to do, and then you term it out onto a buy-to-let afterwards.
Exactly, you move it onto a buy-to-let mortgage, and that's something that, we're happy to do, and a lot of lenders are. And so actually you get activity in all forms of property, but underlying all of that, the government still needs to build a lot more.
Tell me about it. So, there are some current market trends that we've seen come about over the past sort of few years. The after effect of our friend Liz Truss and all the base rate rises we've had. So, and there's obviously a short of passage. What sort of trends are you seeing at the moment? You seeing more people looking at sort of HMOs and holiday lets due to the affordability side of things, or?
Well, yes, I think what's tended to happen, if we go sort of back a few years post that regulation piece in sort of 2017, what tends to happen is banks are like oil tankers. They're very slow to change direction or to implement new things. So actually something as simple as lending to a limited company, which has tax benefits, it's actually quite hard to implement, and they don't have the expertise. They're like a sausage machine. They like cases to come in, don't hit the sides and get spat out. And so actually the specialist market in residential, normal mortgages and buy-to-let sort of expanded. And what tends to happen is banks tend to get hit with all sorts of rules. So actually then you get the non-bank lenders, of which ourselves are. We borrow money from banks as like a big overdraft. Yeah. And ultimately we have a little bit more flexibility on our criteria and things. And as things have evolved, and so our friend Liz Truss who came in, and what happened is pretty much within a 2-week period, the cost of borrowing money went sky high.
Through the roof.
Yeah, so lenders borrow money at a variable rate, and you want to lend it out at a fixed rate. People want consistency. So, you take out what we call a swap, which is a way of exchanging our sort of variable rate costs that go up with Bank of England base rate for somebody who's willing to offer us a fixed rate. And when the Bank of England base rate is below what they say, we pay them money. It's like an insurance policy. And if it goes above that, they pay us money, so the lender is not out of pocket. That went sky high. So every lender started putting up their rates, and that shocked everybody. Now, if you think you're suddenly gone from paying, say, 2 or 3% on a buy-to-let mortgage to now paying 7 or 8%, and you're only getting 4% rental yield in a year, suddenly the economics don't really work out.
And it becomes more of a chore than an investment.
You're hit with taxation, you're hit with higher costs of funding, and let's face it, a lot of people are quite leveraged. They do borrow a lot to do their portfolio, and it's sort of tax efficient to do that in a way because there's less of your capital and less tax.
And then obviously portfolio landlords as well may struggle because of the stress testing that a lot of mainstream banks will do in the background of their existing portfolio, which most of them are highly geared anyway because they use the equity to then purchase more properties.
Yes, and the banks are sort of hit by a few, and they've also got more regulations coming in, and how much capital they have to keep aside for riskier lends. And credit reference agencies, Fitch and Moody's and all these guys, they still have this notion that actually buy-to-let are slightly higher risk than normal mortgages because the basic premise is somebody, if they're having job troubles or money troubles, they'll pay their own mortgage, own roof over their head first before moving on to their buy-to-let, and they'll pocket that. It's not really the case because the arrears will tell you from all the agencies like UK Finance, buy-to-let arrears of people not paying is much lower than owner-occupied.
So, because the thing is, if you've not got someone that's not paying, you end the tenancy and you bring someone else that will pay.
Or you sell the asset.
Yeah.
You sell the property if you're having financial problems, and that helps you elsewhere. So I think what's happened is all of a sudden we're just in this little dip at the moment where, yes, some people have exited the market where they had the property in their own name, so the tax gets quite biting, especially if they're a higher rate taxpayer. So yes, some of those have exited the market, but actually you've got people coming in and buying them under limited companies, and you've also got them looking at different assets. So for example, holiday lets have been booming, especially after COVID, because you can get pretty strong yield out of the holiday lets. If you had a flat in London and you decided to let it out on Airbnb or a short-term basis, you'll earn considerably more in the same period of time as you would through an AST.
I think I was reading a stat somewhere, I think it might have been Zoopla or one of those websites, that you can on average earn up to generate 54% more income doing holiday lets or these short-term lets. I mean, where we are now, Canary Wharf, there's loads of them.
Yeah, absolutely.
Loads of them.
And so, but however, rules were put in to protect hotels and also make sure neighbourhoods aren't all party central, where it's just full of hen and stag parties, and those that own their homes, they're having a right miserable time. But actually, we'll come on to that later, because HMOs, where you have younger or typically younger people in there, and you rent a room and you share the facilities, again, they can yield over 10% versus a property that you rent out normally have been 4%. So all of a sudden, the economics become a lot more attractive. Yes, they're harder to manage and things like that. But what tends to happen, and I think if we look at the simplest basis, all of those more attractive property types, whether it's holiday lets, whether it's HMOs, whether it's blocks of flats, a house conversion, you buy a house, you convert it into a HMO or 3 self-contained flats, the yields are better. And you've got one footprint of land. Yeah. So all of a sudden it makes sense. So yes, landlords are doing that, and it is slower for the banks to change, to adapt to do that. So hence you get more specialist lending because they serve that market well.
Yeah, well, I mean, I'm seeing more HMO inquiries than I've ever seen previously. A lot of the seminars that I'm going to or property events I'm going to, it's all very heavily HMO focused at the minute for these sorts of reasons. There's a lot of lovely buildings which can lend themselves effectively to be converted into multiple self-contained units. I think you're finding the thing that, one of the main things I think is driving at the moment is the fact that some people just can't afford to have a whole entire house. They'd rather, have a room, reasonable price, bills, everything's included. So I think we're seeing a lot more of that. We're seeing developers focus on it more, obviously for the affordability and maximising their profits.
Yeah, that's right. I think my first place when I moved down to London when I was 22, which is quite a few years ago, I got a job in London and I needed somewhere. So back then you got loot and you looked in there and there was a room in a house and it was a HMO. So there were 5 other guys in there, completely unrelated. I rented the larger room, so my rent was a little bit higher. Funny enough, it was owned by a couple of builders, and they would come and collect the rent. And it worked fine. It was great because I was new to the area. This is in Bromley in southeast London. I was new to the area, and I've moved down from the Midlands, and you don't know anybody. So actually, it's fine. I couldn't have afforded on my first sort of post-university salary to have rented an entire flat. So I rented a room, and it worked great. I think I was there for 6 or 9 months. And that is one perfect opportunity for HMOs.
People relocating.
So it's cheaper for me, but actually for the landlord, he's got 6 people paying. And bills have gone up in the last year, but then so will the rents. But it's still fairly efficient because that's split by more people. Yeah. So a flat share with 2 people in it, all of a sudden, okay, that's not a HMO, even though they're unrelated. Yeah. My second place where I moved in with 4 mates, we had 1 AST, but technically that should have been a HMO, and under licensing today that would be. But back then, that was fine. That was just a buy-to-let. And so I think these things have become more attractive. And I think also there's more information about them. Yeah. There's more financing for them. So it's easier to get a mortgage on it. And we can talk a little bit about the complexities of that a little bit later on. But I think it suits the lifestyles of people. So people are more transient with their work. They take up contracts in places. So why would you want to be efficient on your costs? So why would you not go and take a HMO for 6 months if you're a contractor and you've just gone up to Newcastle or Manchester to do it? You want to keep your costs low. And if you're a limited company, again, your expenditure you want to keep low. So I think it does suit people and the way life has evolved in shorter work patterns. But also there's a demographic thing, because statistics will tell you the older you get, the less tolerant of other people you get. We could probably vouch for that. So I think what tends to happen is the older you get, you want to live on your own. So actually for younger people, it's ideal. And the traditional
a lot of young people,
students.
Yeah, a lot of young people that sort of either starting out in their careers, or like you're saying, someone like yourself who's moving from a different part of the country, coming to study in London, or taking your first job in London. Yeah. And it's not too huge a commitment, is it? And you get a bit more flexibility. And
from a lender's perspective, in the last maybe 7-8 years, it's gone from, in the official statistics, about 1% of all buy-to-let being HMOs to sort of 7, 8, 9%. So it is growing, and for specialist lenders, that will be even higher. Yeah. Just because it's more. If you take the high street has been vanilla, and you take the real complex lenders being your sort of tutti frutti Neapolitan, it's definitely moving, and HMOs definitely fit more towards that sort of flavour. I
think a lot of other lenders as well are starting to see these sort of opportunities, and we're seeing more people offer HMO products than sort of ever before.
Yes, I think you'll find people dipping their toe in it. So you have different appetites. So again, when you first move into something, the credit risk director's got to be comfortable with it, unless they've done it before and seen the statistics. So they might just say no first-time buyers, no foreign nationals, things like that. And you've got to have 3 years' experience as a landlord, and we'll only lend you 500,000. We look at an MFS, we look at things a little bit differently. We look holistically at the landlord. And one of the biggest risk delimiters, if you like, is their overall picture of their assets and liabilities, their financial position. And then you can make a call. So, for example, if it's somebody's first HMO, well, you might insist that they use a letting agent.
Yeah. Now, or someone to manage it on their behalf.
Exactly, because they are transient. People do come and go because of the reasons we've talked about.
And it can be quite time consuming as well, especially if you're not 100% sure on how to run and operate it. And I always recommend to people, if you're getting into anything, always make sure you get yourself a good broker, and always make sure you have connections with good property management firms, because most people don't buy stuff that's around the corner from them, where you can go and check up on it. Especially there's a lot of good deals on HMOs in the Midlands and all for the country at the moment, spaces like that. So, finding people that do this day in and day out, the money you pay for the headache you remove is worth every penny.
And fees can be higher, we know that, and managing a HMO. But an easiest example would be you buy your first HMO in a university town, and you approach a university and say, would you like to sublet it and put students in there? And some of them will manage it for you. Yeah. And so actually that's a great intro into it. And Lincoln, where I grew up, a university evolved and grew really, really big. And actually there's a lot of foreign nationals that were buying the terrace properties to turn into student lets. And actually, before the purpose-built student accommodation comes in, that's getting very popular.
Oh,
but
massive.
that tends to be your bigger companies that do it, or your bigger property developers.
Yeah.
And actually, if you think about it, that's a multi-unit block of HMOs, because each flat, and my son was in one at Sheffield University, where each flat may have 8 bedrooms, but you have shared facilities of a kitchen and a dining area and a big lounge area if you want to be sociable. So actually you've got HMOs within a freehold block. So you've got a multi-unit block with HMOs in it. And so again, I can't imagine a high street bank going anywhere near that sort of thing. So it's specialisms, and thankfully the banks don't do everything, because it allows specialist lenders to also add value.
Yeah, fantastic. So, so following this, do you think the HMOs is going to become, something that we're going to see more and more of? Is it an area in the market we're going to see people focus on sort of HMOs more than 1 and 2 bed properties and apartments? Because I know a lot of developers, most of the stock that they're currently building are for sort of first time buyers within the market, which we're seeing a slight drop off of that because for obvious reasons. But do you reckon HMOs are here to stay? Do you reckon it's something that's going to be forever growing?
Yes, I think it will. And I always go back to a friend of mine who became an accidental HMO landlord, and it started his empire. In that he bought a 4-bed house right next to Lincoln Tech College, and it was great for popping in for a beer or a brew. And he then let some rooms out because it was a big house just for him, single lad, and he realised actually this is quite lucrative. So he then moved out and bought another one, and obviously let his room out, and then did the same again, and actually grew quite a portfolio centred around a tech college. But actually, in bigger counties, people do quite like to stay during the week if it's cost efficient. So I think that was a good example where these things can grow out of the accidental piece of it. But I think, look, in big cities, flats are efficient, and you can see them popping up everywhere. On the train and tube in today. When you get around Canary Wharf, there's just flats everywhere. And a lot of them are, these built to rent, they're purpose built, the pension funds and other things. So flats are always going to be incredibly popular. And now they're becoming lifestyle apartments, where there's a gym, there's a concierge, there's a work from home lounge that looks like a private members club. Yeah. And so they are going, and again, the market's evolved for that. But actually, there's all of the older stock, which is where landlords will be targeting. I can buy a family home and turn that into a 6-bed HMO, and they're the most popular, 4 to 6 beds. We'll do an unlimited size HMO, but actually the fact of the matter is the market demand is
a lot of them are
5,
that size, aren't they?
4 to 8 maybe, that's where most of them are, because they were originally family homes.
And a lot of them will be bought below market value. Some of the stuff that needs a bit of love, that needs to be refurbished, because I've seen quite a lot of below market value deals at the moment. Stuff that would be prime and ideal for a HMO, like you said, something that's an old family home, especially some of these old townhouses you get in places like Hackney and places like that, we could be converted into multiple rooms. So I think it is something that, the new flats, especially the ones around Canary Wharf, places like that, like saying build to rents become very, very popular now. I know my brother lives in one, so I know exactly how they work and operate. And there's a lot of them around here where they're building 2 blocks, they're selling one, keeping one on the build to rent scheme. As you mentioned, they've got some amazing facilities now. Even a lot of them have sort of private dining as well. So if you've want to invite your family around, they've got rooms which you can book, which can fit 12 people, and you can cook. Wow. So again, it's sort of making it more accessible for people to.
Even better if they provide the food as well. But that's how markets evolve, and I think so. In these new build blocks, that's not the opportunity for landlords. The opportunity is in the older stock. And if you've got a really big place, you can maybe convert it into. So the first flat I bought was in a multi-unit block. It was a house in Balham. 3 flats it's converted into, amazingly. But if you're going to convert that, you've got to put 3 bathrooms in, 3 kitchens in, 3 separate entrances. It's a bit more expensive, and you've got to have a bit more experience. But for a HMO, it can be as simple as stronger doors with locks on each one, and just upgrading the furniture and facilities so that it fits licensing and appropriateness and hard wear and tear. So actually, it can be a lot cheaper to do that, and it all depends on the appetite.
Depends what you're sort of looking for. I mean, I was personally looking at a HMO in Hartlepool, 11 self-contained units again. that was something that we could have potentially we lost out on the bid, but that was something where there was a large management company willing to sign a 3-year contract,
Yep.
and they do all the maintenance, all the upkeep, and literally it's completely hands off.
Yes.
But
which is ideal for a landlord as part of your portfolio,
exactly.
where you just get paid and get contacted when some maybe more
something goes wrong.
more significant finances required to cover something. So yes.
So you did say about, you sort of touched there on sort of licenses and various different bits and pieces. I mean, what's I know different areas have different criteria. Some areas you only need a license up to a certain amount of rooms. I mean, it's always good to check. So what sort of advice would you give people when they're looking to purchase a HMO? What should they be checking for license wise? Is there any planning permission these guys are going to need? I suppose depending on the level of works, and sort of what's the best way of going about it, really.
Yeah. So the regulations that came in is it's 5 or more unrelated, in a home with shared facilities. So that was the sort of government law that came in. And actually, it all has good intentions, because at the end of the day, you don't want slumlords. And sadly, you do get these images on TV and papers where, there's mold everywhere and it's this terrible condition property. Thankfully, they are absolutely in the minority.
Always a small percentage, isn't it?
Exactly, but that's what, let's face it, bad news sells, and that's what people focus in on. But I also think with licensing, the intentions are good. It's about, safe gas, safe electrical appliances and electric feeds, low risk of fire, fire escapes, fire instructions, knowing who your landlord is and that they've adhered to certain fire safety, furniture and other things. So but that's what you'd expect if you're in a big property. You want to know that
people can get out
safe,
if there's an accident.
And it's good quality. Yeah. And there's obligations on the landlord that they've got to reference people properly. Yeah. It's sort of an all-round obligation. But there is a difference between, as you mentioned, planning and licensing. Now, planning is when you first want to convert or build a property to be a HMO, which is either planning type C4, I think, or sui generis, which is, fits into a all sorts bag of planning permission, which tends to be the bigger sort of 7, 8 more properties. But there are, and the licensing is literally, you don't automatically get a license, and you're not licensed as a landlord to go and run lots of HMOs. It's one license per property. So so if you take the 5 or more as being the simple opportunity, you get in touch with your local authority, the planning department, and they'll talk you through it all. There's lots of help online. There's agencies that do this. There's online agencies that will taught you, they will even apply for your license and get it all done for you. Yeah, the sensible guidelines in place. It varies which part of the country you are and what the licenses are, which is why you need to get in touch with the local authority, because some of them also have additional licensing, which can be from 3 or more. Yeah. So if there's an area where they've had, there's a lot of landlords and there's a lot of complaints about the quality of properties, or people dodging taxes and everything else, then they may bring
taking
an additional
cash in hand payments.
Which was my time at university. The landlord used to come in every week and want his cash. And I think, it's trying to professionalise the whole industry. Yeah. So it is a good thing.
It only benefits the people that are renting the properties, knowing that, their landlords put due care and attention, to make sure everything's right for them, to make sure they're well looked after, where they're staying safe and secure and everything else.
And these things, they're like customer service. Anything is, if you have a nice landlord with nice facilities that are well kept after, that if there's a problem, it gets resolved pretty quickly. You're going to stay there and you're going to pay a bit more rent. So funny enough, it's not rocket science, it's just standard business.
It'll benefit you in the long run, won't it? There's nothing better than having a good tenant that's consistent, you don't have any problems with, and it still fascinates you the amount of people that will still to this day sort of remove a good tenant to try and get a different tenant for a little bit more money. And the grass isn't always greener, is it?
That's right. It works 2 ways, isn't it? And I think so. Your local authority will tell you what needs licensing, what doesn't. They'll tell you if any works need to be done beyond basic signage and your escape routes and everything else. They may insist on another escape route, permanent or semi-permanent or something like that. So they'll do all of that. And it can be pretty expensive. In London boroughs, it can be about £1,000. And it can be from sort of £300-400 in certain regions. But they'll tell you whether it's 5 or more, or whether the smaller ones also apply, which puts a lot of student accommodation in. And a lot of the younger people at our place, they have house shares, which some of them are and will be HMOs.
Yeah. So when people are looking at, if you're a first-time buyer of a HMO, so you strongly recommend that, you check the rules and regulations in the area that you're looking to buy in. Maybe make contact with the correct authorities to find out the costs, the likelihood of getting the license and things like that. And before they start committing to anything, because we get quite a lot of people, don't we, that say, I bought a HMO, they come to us and we check what area it's in and say, right, have you got the correct licenses? And they're like, well, I didn't think I needed them.
Yes. Well, it will get to the legal phase and the conveyancing phase, and the conveyancer wants to see it.
Yeah.
Or as a lender, what a lender likes to see or insists on seeing is that, like a lot of things post-COVID, there can be a bit of a delay.
Yeah.
So actually, it can take a year or two to get your license. But lenders are happy for evidence that you're in the queue to do it.
As long as you submitted.
Yeah, and the legal teams will just check that, your criminal background and everything else, just to make sure that, you're unlikely to be denied. And the surveyor will also state whether it's a suitable type of property. So actually, there are checks there to give the lender comfort. And I think with financing HMOs, as I said before, if you're a first-time landlord or you're a first-time HMO landlord, not all lenders will be interested. So again, a broker will be able to navigate. And this tends to be a very intermediated sector of the market, because, a broker, the lender may or may not be regulated, but because a HMO for a business is very unlikely to be a regulated loan, it's a business loan, it is somebody's business.
And most at the end of the day, SPVs or limited companies.
Exactly, because of the tax efficiencies, or should I say, normal taxation, not very, very elevated taxation. So, a broker will know the types of lenders to go to, will narrow that field down and get the appropriate product, but also will go through the criteria. And again, criteria with different lenders can be a bit of a minefield. And so, what tends to happen is some lenders will cap out at 500,000, 750,000. We'll go up to 3 million at 75% LTV. So you will need at least 25% deposit for a HMO typically. More typically the better. And what tends to happen is it's a very similar process. People get put off about, oh, it's complex, it's this. No, it's not. It's an application like any others. People will want some documents, they'll want some evidence, they'll want a valuation, they'll want some conveyancing, and they'll want to know you've applied for the license. If you've already got a license and you're refinancing it, even better, even easier. And so we just treat it's an asset, it's a house. We want to know that it's not going to fall down, that it's solid, that it's a lender's security. But other than that, it's a pretty simple process, and no real difference to, and lenders like ourselves, we're not really interested in what you do as a job or other things. It's more to do with the asset, the rent, what's the demand for that, and because buy-to-let should be self-sufficient. They should be paid for by the rents that have been paid. The agency cost can be a little bit more because obviously with 5 tenants rather than one family, the agent has to do more work. There's going to be more wear and tear. So you have to consider that. And what often happens with lenders is they will want a much higher interest coverage, which basically means by how much does the rent cover the monthly interest payment for the mortgage. So they will want a higher coverage typically. We don't, because we typically see that the landlords tend to have other assets and have other. It's
good to know.
But we may do. And we look holistically at it. But then that's typically it. But the broker will talk you through all of that, and ideally before you've gone and put a deposit down. Or,
that's normally quite helpful. But I always say the importance of having a broker. Like you said, there's lots of different criteria with lenders. There's lots of lenders coming into the market with different products. So having a broker that knows where to go, who to speak to, which criteria is going to fit, who's going to give you the best service, and all these sorts of things, I think it makes an absolute huge difference on it. So for me, the HMO market, I think, is going to be something that we're going to see a lot more of. I've got a good friend of mine, he's buying 10 to 15 of them a week at the minute. They sort of changed the tact on what they're going for,
Right.
and they're just solely focusing on HMOs, repurposing old buildings, 4 to 8 bedrooms. They've got a model, they've got a team, they buy, quickly go in, do all the work, apply for the correct licenses, and it's on the market within a very short space of time. And it's good that people are reusing some of these old buildings and some of these old assets. Yeah. I mean, last time I checked, I think I use various programs to see what's out there in the market, and there's currently on Rightmove, I think there's 88,000 properties that are primed and good for modernisation. So there's plenty of stuff out there in the market. Some could be used as HMOs, some of them not. But yeah, I think it's a very exciting time for the HMO market, and a lot to come.
Absolutely, and good luck to all those that become landlords in that sector.
Indeed. So just want to finish off by saying thank you very much for coming today.
Thank you for having me.
It's been amazing having you, and glad to get you out of the office for a bit.
Absolutely, always glad to get out.
Brilliant. Just like to say thank you for tuning in to Let's Talk Property with MFS today. Please don't forget to comment and subscribe, and don't miss out on any of our future episodes. If you want to learn more about Market Financial Solutions and what we do, please do visit www.mfsuk.com.